morning, everyone, and welcome to Business Morning Live from Channel's global headquarters in Lagos, Nigeria. It's Friday, the 2nd of June, and I'm boosting Amafaya on the show at this time. Quite a lot to wrap our heads around on the program for the next hour, so stick around. But let's start with the latest manufacturing report for the month of May, as released last Thursday by the Central Bank of Nigeria. Manufacturing index higher to 52.5, reading for the second consecutive month. That's what the 13-page report by the financial regulator revealed yesterday evening. Nigeria's production level, according to the report, was higher at 58.7, expanding for the third consecutive month in the year under review. New orders as a sub-index of the manufacturing PMI at 50.5, that's above, slightly above water, indicating a faster growth 2 months in a row, back-to-back. And some of the sweet points of that report was also the employment level that the central bank says was 50.7 reading. That's also just an inch above the water. That's a green shoot, according to the central bank, after 26 months of negative reading. In other words, Nigeria's employment in the industrial sector had been contracting for 2 years and 4 months. Roll that back, and you'll be talking about most likely the first month of 2015. The flip side of that report was the non-manufacturing PMI. That is sectors outside manufacturing sector, services, retail, what have you, telecommunications, and all that. The index was higher to 52.7 reading, and the central bank says that's after 16 months of consecutive contraction. Business activity index reads 56.2 higher for the second month. Those data were a little bit at variance from what FBN Quest released early yesterday, showing the manufacturing PMI down at 54.0 against 58.9 reading in the month of April. But there's a little bit of the two reports that seem to agree. Consumer spending or household pockets still remain tight, and folks are not spending as they used to, and that's what Dunyisola Afolabi from Afrinvest will be talking about to us, part of the conversation later this morning. Okay, this is a gentle reminder for you on some of the big stories we're chasing in the new month of June. Acting President Professor Yemi Osinbajo is keeping his pen away from signing the budget 2017. One of the key functions is yet to perform as President Buhari's deputy and designated acting chief executive officer of the country. The question on the street is why acting president Yemi Osinbajo has been unable to sign this document now. We're in the 6th month of the new year. Very important month, the final months of second quarter 2017, 30 days, all eyes on key data such as the main inflation report. This month, of course, as usual, we have the FGN savings bond auction. That will be early next week. And then we have the monthly calendar debt auction from the debt management office as well. That should be coming about the 11th of the month. Then the green bonds flotation was said will kick off as soon as the budget has been passed and signed. That is still hanging. And we'll have a bit of conversation around that next week, not with Donald Trump's yesterday moving against the rest of the world, pulling the U.S. out of the climate change pact called the Paris climate change deal. $88 billion was invested in climate bonds and markets last year. Quite a lot. It's been 2 years since the central bank banned 41 items from the interbank FX market sourcing. So what has been achieved? And it's also 1 year anniversary of the managed floating flexible foreign exchange market policy rollout and a rapid FX sales into the newly created windows of the market. So far, about $6.7 billion central banks squeezed into that market. So this is what the first trading day of the new month looks like, and we kick things off from the exchange rate market. The Naira trashed the US dollar on the street yesterday by a whopping 2.09%. That's quite significant, isn't it? Yes, and against the pound and the euro, the Naira was quiet, flat as it were at the end of the day. The Naira was a bit soft on the dollar at the interbank spot market, 0.02%. And on the pound, Naira gained 0.13%, 4516, 35313. Naira will fetch you €1. That gives you a haircut of about 0.16% against the supranational currency. At the investors and exporters market, it was flat, 380.50. One of the major gains we've seen by the Naira in the year, one day, 2.09% on the street. That's quite interesting. With the rest of the world, yesterday's stock markets was quite aggressive. The global markets went on a rally on Thursday, the first trading day of the new month. And of course, we got our own news with the MSCI saying Nigeria's weighting has been increased to 7.9%, I guess, 7.6%. Sorry. So we're 2.77% better. We crossed the 30,000 mark. In terms of market cap, we're now 34.3 billion US dollars. That's very nice. Flip that and you see the market breadth very, very significant. We did 5,107 transactions. That's quite massive for one single day. For 4.627 billion, that's about $15.2 million on the street. That's about almost 40% higher than the final transaction day in the month of May, though the entire volume was less than 500 million. Thanks to industrial goods, where you have the big boys like Dangote Cement, consumer goods at a 2.8%, Nestle, Nigerian breweries. And that's what we're talking more about in the next few minutes. Financial services, which are basically banks and insurance, 2.3% in the green. Oil and gas remain negative, 2.2%. The unlisted securities also wrapping up on the back of the stock exchange for the unlisted securities, the unlisted securities index, USI, up 3.16%. That's much even higher than the Nigerian Stock Exchange on a day. That's quite interesting. The market value of the entire NESD, very small market, about 2 years old, 415.35 billion naira. And in terms of transactions, not a very bad day, a decent day, 10.372 million naira in total transactions via the NESD, that's the National Association of Securities Dealers. That's what NESD stands for, OTC market.